Thank you all again for coming, and I hope you enjoy the 1 to 2 hours that we're going to keep you here.
Discussing anything that brings more business to my members is definitely at the very core of my business. So this is very exciting to us, and I would like to encourage all the members to participate in this first of its kind. Through the success of this corporate bond, I would also like to encourage the CASIP members to bring on board as many SME institutions as possible to raise money through the issuance of corporate bonds.
I really do consider myself a friend of CASIP and the broking fraternity in this country, and that's why when we came up with this bond, I decided that we needed to have a meeting with the brokers so that we can tell them about Jamii Bora Bank. In the last 2 years or so, in 2011, we had a rights issue at Jamii Bora Bank and raised 270 million shillings. Not a lot of money, but for us it was then. And we used 2 of your members. Mr. James Wangunyu was our advisor at SIB and Faida Investment Bank. Last year also, 2012, we raised another 520 million shillings. Again, we had SIB and FIB as our advisors. And during this bond, they still are advisors. So we really do consider you as our partners, and we would like to walk the journey ahead with you.
The balance sheet of this bank has really grown pretty fast. It's moved from 2 billion to 4 billion, has doubled in 1 year. Obviously, with that ramp up, there is a little bit of instability that has been created, maturity mismatches, and so to inject stability to the bank's funding base, a bond with our advice was found to be a suitable idea to create some of the alignments that are necessary to stabilize the balance sheet. The bank, again, is growing pretty fast and is growing its portfolio of products. So to be able to finance new products and services, and I think I have the right to talk about the mortgage space that the bank, has gone into, some more long-term lending that has been seen in the past. So longer-term deposits have then been deemed necessary to be brought or introduced into the balance sheet. The offer is a 5-year, 1 billion Kenya shillings bond, fixed rates of 13.3%, 50% principal guaranteed from Africa guarantee funds. In the unlikely event of a credit event, you are secured to the tune of 50% that you can actually call on. We debated along those lines whether we need to do a rating for this bond or a guarantee. And I must say that we actually found the guarantee much more better because it is enforceable. The maturity of would be in 2018, and shortly I will get into the details of the timetable and the particular dates that you need to take into consideration. But it will be somewhere mid-2018. Interest will be paid semi-annually in arrears commencing 6 months after the issue date, calculated on a 364-day basis. Coupon, I've already mentioned that, is 13.3%. It will rank pari passu with all other outstanding unsecured and unsubordinated obligations of the bank. It will be issued in denominations of $1 million shillings, and so really the minimum that you can buy is $1 million shillings worth of bonds, and thereafter successfully. After the third year, the bank would like to have the right or the option to redeem any or full part of it, of the principal, but this will not be arbitrary. It will be something that will be discussed or negotiated in good time, and obviously to see that it also fits the interests of the bondholders. We have completed the information memorandum and have actually started distributing, so some of you may already have it in your hands. This week started on Monday of this week, 15th of July. The bond also opened the same date on the 15th of July. It will be running for a full month. On the 14th of August, we close. We will quickly do the tallies and announce the results of the offer 2 days later on the 16th of August. Payments for it, for those who will have issued the revocable bank guarantees of letters of undertaking, will then expect that to be completed 3 days later by the 19th of August. The same date is when the bonds actually now starts being active. So the valid date is 19th of August similarly. Every shilling above $1 billion shillings shall be refunded, and that will happen on the 19th of August. And we expect to commence trading a week later on the 26th of August.
I've been involved with the Kenyan bond and capital markets since 2003. Nevertheless, bond turnover has been jumping up and has now been above 400 billion every year since 2010. And really, if you look at it in 2003, which is really the first year when anything would show up on this graph before, because before 2003 there was virtually no turnover in this market. I think the first time turnover crossed 100 billion was in 2009, and really 2010 there was a 4 times increase in the market, 483 billion turnover for the first time.
At this stage, what we're saying is that as far as the pricing model is concerned, and we trust you will either create your own pricing model or you will wait for one from us. But what we are asking you to do, of course, is to vet your pricing model. And obviously, one of the things we were discussing is as a reference issue when you want to value the bond on your books, is you probably will use the Government of Kenya 5-year bond issue as a reference price.
This product essentially targets fixed income investments, where you have, guaranteed periodic payments, like the bond that you're talking about, where you're guaranteed, periodically you'll be getting some income.
There's nothing ordinary about this bank from our origins to our present, and there will be nothing ordinary about this bank going forward. We are innovative, and we intend to be a middle-tier player in the next 5 years, and play in the large sector within the next 8 years. This is a sound investment. At 13.3%, it's 200 basis points. Is it 200 basis points above the last issue of the government treasury bond? And being a bank-issued bond, you could put it above the same level of risk. And in addition to that, we are providing liquidity through a formalized secondary market.